Today, I'm joined by Ali Javid, the CEO and co-founder of Wrapbook, a leader in the payroll, accounting, and AP side for the film production industry. As of September 2024, Ali and the team at Wrapbook are now valued at over $750 million. Hope you enjoy our conversation. Payroll is incredibly important. Like, you can't mess that up. People lose their jobs if they do.
When you think about payroll, AP, and accounting, most people think of accountants. If I believe in something that other people think is a 1% probability, I don't think about the 99%. I just think about that 1% is going to be 100%, and I go make it that. And I don't think founders can be VCs because you're not playing probabilities, you're making 1% equal 100%. Can you simply explain what your company does in a way that anybody can understand it? And if you can't do that, you're just going to struggle fundraising, period. One of the things that's happening in the trade wars is we're forgetting about our soft power. The US historically has had really strong soft power all over the world. That soft power is actually our portrayal of America through film.
Ali Javid, welcome to Change Order.
Thanks for having me.
Appreciate you coming in from LA.
Love New York.
Well, maybe to start off, we were just chatting a little bit about Elad Gil's book, and I think he talked a lot about a founder's strengths and how as you go on in the journey, sometimes a founder's strengths end up hitting a cliff and they go from a positive to a negative. What's a strength of yours that you've had to evolve over time and maybe work on the weakness sides a little bit more?
The way my brain works is I always have to understand the details to believe in the puzzle. And I think that's both been a huge point of leverage and also I think has caused a whole bunch of interpersonal types of dynamics where like I would randomly jump into a team's work stream to just deeply understand what they're doing. And for a long time, I was told to stop doing that. And what I learned was it's not about not doing it. It's about how you go do it.
How do you do it differently today?
I tell people in advance what I want to understand. They prepare it for me. And then they do all the work and I do all the reviewing. Where before I would surprise attack and just dive into Looker myself and then come out with an analysis, and that would kind of catch everyone off guard.
I assume when you were doing that before, your employees were probably giving you some feedback, like you're getting all up in my stuff. Like, can you please leave me alone? Or was it a different thing that shifted your mindset?
It was people being unprepared and then reciprocally trying to prepare for everything always, which was just horribly inefficient. Where asking someone to prepare something for you gives them time to actually go do it. And then also gives them the opportunity to caveat saying like, hey, this is super early and I think there's these issues. We already know those issues. This is what we're going to go do about it. And it just really flips the equation from something that feels disempowering to something that really empowers teams to actually tackle the problem.
So you were saying the 360 review was the moment that you realized that you had to make a change. What was the terminology that your executive coach used?
Yeah, every year I get 360s from my reports and investors, and they coined a term of the swoop and poop, which immediately resonated with everyone who reported to me, which absolutely horrified me. And it was this idea of, without warning, I dive in and go through all the details where I needed to instead stop, ask them to assess the situation, and then give me the assessment.
Isn't it funny that if somebody coins a term that applies to like giving you language for something, it actually sits with you differently than just understanding like, oh, I'm doing this thing wrong?
Yes, totally. And it can also become a funny moment where you all can laugh about the term.
Yeah. I guess a question for you. You said you're a part of a large WhatsApp group with many founders that are well known or have raised lots of capital and have companies that are worth lots of billions of dollars. What percentage of those folks do you think have executive coaches?
I think in the channel, I'm perhaps like one of the younger companies. There's up to $30 billion companies on the channel. I imagine at least half of them have worked with a coach at one point. I would be surprised if most of them are still working with coaches.
Why is that?
I think at some point, when you get to that level, you're the one coaching.
Why do you work with a coach then still?
I worked with a coach for a bit, and I think I was feeling this both immense joy of building Wrapbook and associated a lot amount of pain with building Wrapbook. And I wanted to solve the pain in order to really be in a rhythm of being able to build a company for a long term. And I didn't know how to do it. So I started working with a coach.
There's a lot of nuance to unpack there, and I want to dive into Wrapbook in a second, but you said a rhythm, and I've interviewed a lot of successful entrepreneurs here, and I've learned a lot about their rhythms on a weekly basis, on a quarterly, annually, literally their daily basis. What is your rhythm, or what are the key components of your rhythm that you find helpful?
I think the underlying question to it is what gives you energy. And if you can spend your time aligned with your priorities and what gives you energy, then things feel like they flow. Where if instead you're spending time on things that feel like depleting, then it's a very different thing. And for me, I love solving problems. I love working with other people on solving problems. And part of the shift that increased me feeling like I was in a rhythm was I tried to change the working relationship of people with me from reporting up to working together on solving a problem. So historically, I think I spent a good percent of my time where people would just report out to me, inform me of what they thought was important. And now the majority of my time spent mutually solving problems together.
Interesting. Maybe to double click into that, what does that look like tactically? Like, how has that changed your one-on-ones, for instance, with different leaders in the org?
I shifted one-on-ones from a weekly thing to a monthly thing. And that monthly check-in is sometimes about career, sometimes personal, sometimes it's a report out. And if people want to schedule time outside of that, they absolutely can. And I encourage it to be about a problem. Like, let's talk about this thing that you're trying to tackle. And it can be a group review, it can be a one-on-one, it can be ad hoc, it can be pre-scheduled, but it's not this repetitive cadence where people are preparing a report out.
Got it. So talking about problems, sounds like there has been, but less and less so, problems on the payroll side in Hollywood. I think many people who probably watch this have heard of the more horizontal payroll platforms like the Ripplings of the world, or they look at the public markets and see many of the large players that are out there, honestly, globally. What are the problems in Hollywood? Why did the production world need its own company attacking that space?
The production world has always had its own companies tackling this space. Wrapbook wasn't the first vertical entrant. It started maybe 30, 40 years ago because the union agreements are so complex to figure out how to calculate the wages. You had to hire people who knew the union agreements. And those people started payroll companies, they started accounting companies. And then what you've seen is that after you calculate the wages, the entire rhythm of production is so different than every other industry that you want vertical workflows. So union calculations, I'd say, is a hard requirement. And then all the other workflows are really about efficiency. Like, imagine hiring and firing your entire contingent workforce of employees every month. It would break every payroll system and you'd probably get sued for compliance.
What are some of those nuances? Like, walk me through what that flow could have been from, you're working with this labor union to the accountant needs to make a bunch of calls, read through a bunch of documents.
So first, you get a project greenlit. You might not actually know what union agreement you're under yet, which means you don't know how much you have to pay people and how. Then you get the union agreement, and it's a mad scramble to start paying people because people are likely already working. Then everything just flows so quickly. You have to think about you're hiring freelancers who are going to hire other freelancers. So you don't even know the people on set, and there's hundreds of people on set who are your employees. So I think that paradigm is drastically different. And if you can think about paying talent, you're actually never going to onboard George Clooney. His agent is going to onboard George Clooney. Someone has to sign his time card. That has to be input into a system. And then you have to calculate his wages. And his wages will change based off of budget size, distribution platform, and maybe not for George, but for other people by geography of what you're shooting. So it's just incredibly complicated.
That's wild. Was there a lot of consulting firms that popped up in the space before that were like handling this for the production houses, or did they have everything in-house and those companies needed the software?
I don't know of one company in-house who successfully pays cast and crew. I think some studios calculate and pay residuals themselves, but for the actual payroll, it's all external.
Interesting. And so I imagine this is a global problem.
Production's definitely global.
And so are your customers global at this point?
You know, when you look at the majority of spend, it's by US companies, and you split that in really two parts. One is first party productions by studios, and second, finance productions with mid-market companies. And where they shoot will be all over the world, sometimes in multiple geographies at the same time. But it's predominantly paid for by US companies.
And who is the buyer of what you guys are ultimately building?
The production company.
And who at the production company?
It's changed a bit over the years, and it changes by size. Like, one of the gorgeous things about Wrapbook is we care about every production company, regardless of the size of one's budget. On a really small independent shoot, they won't have an accounting office. They'll just have a producer, and the producer will be the client. As you get to a larger company that reoccurringly does films, they'll have a head of production, they'll have a controller, and then both are our clients. When you get to a larger production company, you'll have a head of production, a controller, and a VP of finance. VP of finance might make the decision, but they're definitely looking to their HOP and their controller to make that decision. And I think this is also one of the magical things about Wrapbook is we built a solution for every single user, where others have really just focused on the end buyer.
Say more about that. How does that differ between you guys and maybe the private equity owned guys in the space?
When you think about payroll, AP, and accounting, most people think of accountants. Like, the accounting team is going to pick who they use for payroll, how they pay vendors, how they actually do accounting. Wrapbook started in a very different worldview, where if you have all the data coming into a system accurately, on time, and fast, then the majority of accounting jobs is done. Because before, they were chasing paper. They were then having producers chase paper. This started with a profile. When you hire someone on set, they create a profile. That profile persists across every single company they work for. We now pay 210,000 people. Around 50% of them have reused that profile across 2+ companies. And that profile is less so of payroll onboarding, and it has now become more like where they see their income from every single company they work for, which is just a magical thing. And that means timesheets are done automatically. It's in the system. You don't have to re-onboard someone. It's your crew that is actually creating POs and submitting POs, because when they show up on a parking lot and they need to rent it out, it's them who gets the receipts. So now they're all inputting all that information, and it goes through all these approval flows. But this has changed the accountant's job from opening up Dropbox, finding 10,000 receipts and manually inputting it in. Nevertheless, now you have AI just doing OCR, which I think is an obvious thing to do, but is magical in this industry.
It's pretty incredible. I mean, that's an amazing moat that it feels like you guys are building out, and as many would call it, I think a jaw-dropping customer experience on both sides of the marketplace here.
Yeah, it's a accumulating advantage.
Now, when I hear the level of nuance you just described, and I look at your LinkedIn or your resume, I go like, how the hell did this guy figure out this problem? Like, what was the actual process for you coming up with the idea?
Most of my career has been in hard tech. And in hard tech, often you create amazing science and then you go look for problems to solve. And I got incredibly good at understanding customers' problems, selling them a future state of what the science could solve. And I got into this solution selling business development-esque type of function. And it really doesn't scale. Like you have to have a repeatable problem that's hair on fire that people want to pay to be solved. And then you have to have a repeatable product to go solve it. And after 15 years of doing that, I just flipped it and said that the times that I've had the most fulfillment in my career is when it's repeatable. So let me go find problems. And this was the fifth problem that I came across. And it was the one that was the most painful. Every single producer described the same problem. It was consistent. They all described the same solution. And then like 1 out of 50 of them said something crazy, which was, oh, I've actually thought about trying to solve this myself, but it's not possible. And they thought it wasn't possible because there's largely been a duopoly in this industry, and we decided to take it on.
That's super interesting. Any of the ideas before that you want to share?
I mean, I jumped all over the place. The company before this had an exit to Amazon, and that was a horrible tax thing. So first idea was a automated personal tax advisory service, and then decided not to do that because you only pay TurboTax once a year. The second was a rules engine for OFAC sanction compliance at banks, because my friend was responsible for OFAC sanction compliance, and then decided not to do that because banks don't really like to spend money. And I just kept iterating.
That's amazing. How'd you come across this one?
My friends were in the space. They were working on project management software. And I ended up meeting a ton of producers. And I started talking to them about what their problems were. And they all described the same thing. I then called my own friends, and they all were describing the same problems. And you looked at this existing solutions, and it literally was paper. So it was just an obvious thing to go solve.
It's kind of fascinating. I was sitting here last week or 2 weeks ago with Daniel Simon from Coast, and he's working on his second company. And we had a good conversation about why the market you choose is fundamentally critical. Like, it is the most important thing. Whereas a lot of, I think, VCs on the internet will go out and tweet about how like we're founder first and like go solve a problem that you've experienced personally. But I find that more often than not, the people who are sitting in this chair, they're actually not that profile. Do you have a point of view on how people should ideate?
I mean, I think we love patterns because patterns help us make sense of the world around us. And I think the thing about building a large VC-backed business is it just constantly breaks all the patterns. So I think you as a VC have an incredibly hard job. I think my job is quite different, which is if I believe in something that other people think is a 1% probability, I don't think about the 99%. I just think about that 1% is going to be 100%, and I go make it that. And I think it's a very different lens. And I don't think founders can be VCs because you're not playing probabilities. You're making 1% equal 100%.
Where does that confidence and conviction come from for you?
A painful lesson. Uh, you and I were just reflecting on our earlier days talking when we were raising our seed round. And one of the things that came up was VCs questioning the market that we were in. And I was receiving so many no's, I started placating VCs. VCs said, "Oh, I don't believe in this." So then I started changing the story that I was telling VCs in order to try to raise funds. And in hindsight, I should have just stuck to my guns, explained exactly what I was doing and why. And if they didn't see the same angle, that's okay. But changing my tune in order to try to like help a VC believe in what I was doing was the wrong fundraising thing. It's also entirely the wrong mentality.
Is there a difference though between like changing how you explain something and changing the tune the way that you're describing it? Like, I don't think that you should ever change your vision for a company the way that you're pitching it to a VC just for like happiness on their behalf. But sometimes I do find that if I'm starting from the production world, payroll systems from scratch, I might need you to walk me around the problem in a different way that, you know, another investor might need to understand it.
For sure. Y Combinator's application process, they make you describe your company in like 2 sentences or some amount of characters. And I think it's a really good exercise of, can you simply explain what your company does in a way that anybody can understand it? And if you can't do that, you're just going to struggle fundraising, period. So that I 100% agree with. You have to be able to clearly, simply explain what you're doing and why. I think the mistake that I was doing, which is a bit different, was instead of really focusing on the crux of what we were solving for, I was trying to expand it thematically to a whole bunch of broader statements which VCs could perhaps buy into that weren't as fixed on the market.
That makes a lot of sense. I mean, sitting here today in hindsight, when I think back to the way I understood it versus like now the way I think I understand it, you had two incredibly large companies in the space that had very low NPS scores, it sounded like, and products that were structurally inhibited in what they could actually build. And they probably weren't investing in the product as much as you guys were. And therefore, your approach just had the ability to go into the market and capture a lot of market share. And I imagine a lot of us probably missed that over the years.
I mean, I think entertainment's really hard to understand. What we do is pretty complicated and insular. In New York, when I lived here, people didn't really understand what I was doing. In LA, people get it. Like my neighbors are paid by Wrapbook. And I think the other side of it is for however far along we've come, Wrapbook today serves 1% of the entertainment industry. So we're really beginning days. And the thing that has remained true is the duopoly of EP and cast and crew have a ton of functionality that's absolutely friction filled with products that have been glued together and PE funds that continue to milk them dry. So the crazy thing is the opportunity statement hasn't changed. How incumbents have sat in the market haven't changed. And the pain of the customers have only increased because the industry has continued to change and there's higher scrutiny with less budget. And the solution for it is a modern software stack that improves their efficiency, accuracy, and output.
I want to pull on a couple of threads that I think we're touching on here. One of which is you're talking about narratives and sales in many ways. You were selling VCs, then you had to go sell into, production companies. The other is you already mentioned like the production in Hollywood world, relatively speaking, at least from my perspective, is insular. Payroll is incredibly important. Like you can't mess that up. People lose their jobs if they do, or they get sued. And in Hollywood, that happens, I imagine, a lot. How did you build trust in the early days to get your first customers on board?
One of the things we've talked about since I think year one was we're building a 100-year company. And the reason we talked about that time frame is when you think back about products you used 10, 20 years ago, what you're going to remember is probably the times that somebody broke your trust. You're not going to necessarily remember like all the features. You're going to remember how they treated you over a long time horizon, and what caused you to switch products was losing trust. So we talk about building a 100-year company because if we maintain our customers' trust when things break, that's when you really win them over. And I think it's really, I think when incidents happen, people often lean the opposite way. They start thinking about, oh my God, this thing happened. I can lose this amount of money, or I might owe this amount of money, or I have this amount of liability. And they start trying to safeguard their interests. Where when an incident happens, you need to do the opposite. You need to think about your customers' interests, and you need to help them even at your own cost. And that's how you win trust.
When did the idea of the 100-year company come to you?
A early investor, Payam Zamani, sent me, you might know the author, I forget. The author talks about playing an infinite game. And in just thinking about that and thinking about a really long time horizon, trust really stood out to me.
Yeah, that's, I think, a Patrick Collison favorite. So speaking of trust, I was listening to a podcast with Neil Mehta recently, and I think a lot of people know the story behind the SVB collapse and potentially the legendary investment that became a $500 million check that Green Oaks wrote into Rippling to save them, or maybe not even save them because of the way that all played out. But I'm sure that weekend was stressful for all of us across the industry. Was it a stressful weekend for you?
SVB, I forget the rank order now, but what they were like the 20th largest bank in the US, 16th, 20th, something like this, is staple. Like you don't really think my bank is going to collapse. And we had our customer funds going through SVB to pay out. And when Friday came around, we didn't know if the bank would open on Sunday. And going to that, we're building a 100-year company. What is the right thing to do for your customers? I emailed every single company and worker paid through Wrapbook on Saturday morning saying we're going to cover 100% of your funds, which is a pretty bold thing to do because we didn't know what would happen with Silicon Valley Bank. I knew it was the right thing to do, though, and we did it. Then on Monday, we were paying people through another banking partner that we had redundancy with.
Wow.
And we happened to get all the money out of Silicon Valley Bank, and we didn't have to eat something that was enormously painful. And that was a huge relief. I think for the industry and for our customers, they just saw us at a point that was really testing of our character, and they saw what we stood for, and it still matters today. I was at a client event maybe a month ago, and I introduced myself to a producer, and he said, "You're Ali Javid?" And I was like, "Yeah, I'm Ali." He's like, I remember you because you emailed me when I was waiting for my paycheck, and you told me that you were going to pay me even if you lost your money.
What are we talking about in terms of like the quantum of capital? Like, and the match between like your balance sheet at the time and like how much you're gonna have to wire out? Was it like 10%, 50%? Like, how crazy was it?
We were setting up loans over the weekend in order to make sure the company was in a good place.
Wow. With your VCs or other people in the ecosystem?
Uh, to A16Z's credit, their GPs personally offered to help, which is just such a wild thing. Like they didn't go to the fund. The GPs of the fund were offering their personal money. Other investors who are amazing and also happen to be billionaires were ready to also write personal loans. And we were putting the entire company behind it because we thought that it was both the right thing to do and it's what would make our credibility for the years to come.
Why do you think those investors are willing to step up like that?
I think the thing on that is investors get to know people. Um, I think they invest in people. I think on the other side of it, I'm really lucky to have super high quality investors at our table. I don't think all investors would have done that, and some couldn't. Like I called one of the funds, and the partner was like, "Look, my personal money is with SVB. All of our funds' money is with SVB, and I don't know if I and the fund are going to be broke on Monday." So I think there's both a quality characteristic and an ability to be able to do something like that.
Yeah. I mean, you're no stranger to, I think, challenging wartime like moments. When we got introduced, it was initially, I think, 2020. If people think back to what that was, there was a pandemic then. That wasn't very good for the production industry. How did you handle that time as a CEO?
Someone online smarter than me said something like, as a founder, you have to be comfortable being misunderstood for a long time. And when the pandemic hit, we had just closed our seed round. We were around 20 employees, or no, sorry, we were 7 employees. And all the rhetoric from all the VCs was cut costs, extend runway, be default alive. And we leaned the other direction. We lost 90% of revenue in 1 week. And I made the decision and had the support of investors to triple the team size and to build the product that we thought the industry needed. And it turned out to be a consequential decision that changed the trajectory because what COVID did was it shifted the culture of production. They were so accustomed to paper, but now you couldn't touch paper that someone else had touched because you were worried about COVID. And it was a union rule, so it wasn't about a preference. And we were the only digital end-to-end solution in the industry. And we grew 5x in the next 12 months, despite the industry being down 90%.
Wow. Is that on a logo or a revenue basis or both?
On a revenue basis.
Wow. Because it reminds me of, I forget, there's a famous investor in the public markets that talks a lot about how when there's market pullback and other people are afraid, putting your foot on the gas to grab market share in moments of time like this are incredibly powerful. And we've seen many companies do it, and it sounds like that's exactly what you guys did. You went after the opportunity. Maybe other people, even though PE firms aren't really selling too hard, but you guys really invested in it when the noise was away.
I think you also have to do the math, and it's different for every single company. But yeah, opportunities come, and how you react and how quickly you react drastically changes your fortunes down the road.
Totally buy that. Speaking of what some might consider a new wave of disruption coming to the production market is AI. Are you a bull or a bear when it comes to AI's role in the future of movie production?
Largely, I think it's going to increase the amount of creativity in the industry. I think it will increase the amount of amazing content that we see. And to put it all into context, uh, in my lifetime, goodbye Laserdiscs, goodbye DVDs, hello streaming, maybe goodbye movie theaters and linear TV now. And throughout that, if you look at the actual amount spent on content from 2014 to 2022, it's increased every single year. 2024 is now back to 2022 peaks loosely. So I think AI is a magical thing that we don't quite yet understand. It for sure is going to improve VFX workflows. It for sure is going to start the low end of animation and work its way up. And I think there'll be cases where AI both creates efficiency, and there'll be places where AI completely reduces the number of people needed to go do something. I think the net of that is we'll see an explosion of creativity, and with that, we normally see an increase in spending.
There's something I miss about, driving down the road, going to Blockbuster with my parents, like walking around the little store, grabbing the DVD, making sure you don't have any late fees. But I do wonder if we're like entering this era now where the new experience might look like you sit down with your kids and like you let their imagination run wild, and like they can create certain things at home, and there will be a level of quality and buy-in to that product versus the much tighter, much more professionalized versions that will eventually come out of Hollywood or wherever it might be.
I imagine there's a mix. Like YouTube, TikTok, Instagram in our lifetime went from something that felt weird to something that just now everybody spends a part of their day on, which is a total shift. And then you look at the quality of content and it's drastically changed and increased. MrBeast is doing $2 million productions. Like he has a production company, and that production company uses entertainment payroll companies. So I think content always changes. I think what we've seen so far is that content spending has continued to increase every single year, and that we love entertainment.
I think the reality is no matter what platform evolves and grows into, there still will be an 80-20 across platforms, where the biggest celebrities, the best quality, content will continue to grab the majority of eyeballs because incentives are aligned. When you think about YouTube wants you to watch the best videos, and then they want to show the best videos. So that's going to rise to the top. And then MrBeast has a budget of $2 million for production, and that's good for you guys. Versus it feels like the old model of creating an idea, putting together like a $10 million budget, and hoping enough people watch it and we can monetize it enough. That might be a little bit more at risk. And so you become a longer, long tail, mid tail, however you want to frame it, of companies will pop up and maybe increase the TAM for you guys along the way.
We'll see what the mix is. Even the mix within streaming platforms have changed. Like if you look at Netflix's content, it is drastically changing. If you look at Apple TV is like the new HBO. Like all their content is gorgeous, and it's $2 million per episode. And I think it's a loss leader. And I think they're doing it because they believe that it helps with brand and selling devices. And I think that's one of the things about entertainment is it's not all about making money on the end, but the end production.
It's all part of the bundle now.
Yep,
They're making content to get you to buy an iPhone.
it works.
It's kind of amazing. I just hope that they don't continue to like just do random copycats of old shows that worked. Like I'm watching Ransom Valley right now, and I'm like, this is literally like Yellowstone, but like in New Mexico.
But you're watching it.
It's so true. It's so true. So to shift gears, I do want to talk a little bit about AI. I've been having a lot of dinners with friends that are founders, operators, executives, and I feel like the conversation around what are you doing? Like, how are you using AI internally? Like, there's finance teams, there's engineering teams, product teams, sales teams, et cetera. What are some of the things that you are doing that you find the most impactful internally today?
It's very different per function. And I think it's different per function, and then it's different for personal productivity. Like personal productivity, it's easy to say that you and I both went into ChatGPT to prepare for this. That's a no-brainer. The per function thing, I think, is much more nuanced and iterative because I don't think closing your books in finance is about asking ChatGPT questions. It's largely about third-party tools leveraging AI to turn accountants from doers to reviewers. In support, it's definitely about third-party tools, making it so that you can automatically solve tickets, you can add voice to your customer support number. In engineering, it's I think the thing that a lot of companies have been talking about is how much code is written by AI. Shopify was smart to talk about how much code is deleted by AI. There's all these other workflows about just, I have a bug in the system. It's horribly complex to understand that bug. How can I triage this? And I think the challenge and opportunity is understanding for our current state, which maybe lasts for only 3 months, what is AI good at? And then what tools should you use in order to apply it? And then you have to just constantly be iterating. So I think for us, we've been looking at it in every function, and I've been really focused on the iteration.
Did you do that exercise?
We do that exercise every 2 months now.
Every 2 months. Wow. What if you had to stack rank it, what's been the most impactful AI tool to the team, and which department was that? And it can be you, by the way, too. Like tools that you use.
I don't feel like we've seen that yet. Like I think a lot of you'll remember the name of the company better than me, but one company said they're laying off 1,000 people because AI can do it better. And then 6 months later, they said, oh no, we're hiring back 1,000 people because humans want to talk to humans. I think a lot of executives feel the pressure to explain how AI has completely transformed their company. I think it's been really transformational in pockets, both for us in how we operate and how we build software in terms of our customers' usage of our software. But I don't know if we can yet say that Wrapbook is 30% higher output, more efficient, that our customers are that way. Sure, they don't have to do data entry anymore. AI will do that, but I think it's still early innings.
Have you tried O3 yet? With OpenAI, ChatGPT O3?
I mean, just ChatGPT, the whole thing, like every single time you open it up, it's insane.
It's wild. I started going down this rabbit hole of asking it to make prompts for me. And I kid you not, I've probably spent 20 hours in the last 10 days since I was at OpenAI headquarters, like playing with this thing. And the sheer amount of information that I'm getting out of it, I am mind blown. I mean, I learned that you like Dan noodles from Han Dynasty. Is that true?
That wasn't a blog post, I think like 5 years ago. I pulled it up for you, and it was pretty great. First of all, I was surprised. It had a photo of you. It talked about your health conditions from a childhood that I guess you talked about on a podcast. It said what prize you won in the past. I mean, it's absolutely insane. And I think like you go to market, and one thing you could tell everyone is like open up ChatGPT and research people, but that's a largely not great enablement. And then you see a tool like Clay come out, and then Clay is just a very structured way in order to use AI for TAM research, for lead enrichment. And then you could, like, Wrapbook is the #1 blog in the entertainment industry. You could tell writers, like, use ChatGPT to write, or you could go to Daydream and just say, hey, can you programmatically make every single article for me? So I think the thing is, like, AI is an absolute paradigm shift. It's not necessarily about asking people to leverage ChatGPT, though. A lot of it is about third parties leveraging that paradigm shift within the workflow needed for the function. And that feels like in the early innings still.
Absolutely. I think we're ultimately in a race for context and data. And if people can get into companies early and do things like Clay, which is aggregating data from many places, and then it can create this reinforcement mechanism to improve the outputs for you guys, companies are just going to have monster prizes at the end of it and make, honestly, a lot of people's lives easier.
One of the things I'm very much looking forward to, and I hope it happens in the next 6 months, is if you look at Lovable, if you look at Cursor, they've gone, like, Lovable started in an interesting spot of like, don't write software anymore, just prompt software development, which totally makes sense if you're incubating a company, if you're testing an idea. If I heard of one guy who created an app that counts calories and now he makes $30,000 a month. Like, that totally makes sense. But if you're something like Wrapbook, you don't want to start from scratch. You want a tool that understands your code base, and that a designer can prompt and create a pull request that is reviewed by engineers and then implemented in your code base. And I think when you get to that, I think it's a complete game changer, because a lot of what we're seeing at Wrapbook is we have all of these nuanced workflows, and it doesn't make sense to use Zapier to send customer data to 10 different endpoints. What you really want is you really want to enable the end business user to be able to modify the software to fix the workflow.
Ironically, you said way earlier in this interview that previously to Wrapbook, you did a lot of like custom things, right? And that your favorite thing was doing something that was scalable and repeatable and could be used by many people. I do wonder if we're entering an era of software now where building modules and doing what you're talking about is actually going to be the norm, and it's going to be 100 times easier. And so therefore your old skill set is still incredibly powerful.
I think the skill set of being able to understand customer problems and sell people the future just forever will be impactful. I think AI turns a whole lot more people into creators.
Totally agree with you. I know we have a few more minutes here. So I guess one question I had for you, you are clearly incredibly thoughtful and intentional, and scaling up a team 5x is like not an easy thing at all. And it sounds to me like culture is a really important thing. What are some of the cultural tenets for you that you have made sure you continue to instill in your team today, and how have you tried to do that?
Yeah, so I think you're referencing, we went from about 20 people to 150 people in like 12 months. And I think the thing that's notable about what we did was most of that growth was in engineering, product, and design. So engineering, product, design went from 7 people to 90 people in a period of 12 months.
Wow.
Which I think is something that most people don't do in that function. We kept repeating, like, we want to build a 100-year company. It's about building trust. We kept reinforcing it's about surfacing issues so that we could solve it together. One of the things that I hated at prior companies was that execs never actually knew the problem because everybody else would obfuscate the problem because they felt like they were going to get punished if there was a problem. Back then and still today, people are rewarded for surfacing, here's what's not working, let's go fix it. I think that's incredibly important in a remote environment. Velocity is so important. We talk about bias towards action. And because we move money, we talk about moving slow in high stakes and fast in low stakes. And these are the things that like we've repeated over and over. We're going on 8 years and we've had the same focus and values since the beginning. And it's really built a strong foundation.
It's awesome. Let's talk a little bit about the personal side. A lot has changed in the political environment over the last 6 months, and a lot of that has seeped into Silicon Valley, seemingly. What's a change that you are a proponent of, and also what's maybe something you disagree with?
So I think one of the things that's happened in our nation is rhetoric has changed. And there was so much rhetoric around diversity, equity, inclusion, and belonging. And then it went to, it's all about merit. And I think the thing that gets lost in that is the practical side, because it's always only been about merit. Also, I think everybody believes in meritocracy. And if you don't actually reward people equitably for their merits, why the hell would anyone care about their merits? So I think the rhetoric of the conversation has missed the point where it's not diversity on one side and merit on the other side. It's merit is your gate. You're hired based off of performance. You're promoted based off of performance. And we're going to reward you equitably. And we want you to feel like you're a part of the team. And we want people of all different backgrounds. Like, we love people from tech. We love people from entertainment. We love people from every ethnicity. We love people who can speak all different languages. I think when you have a extremely high performing team of varied backgrounds that feel a part of one team, who are measured based off of performance, you absolutely crush it. And for me, it's been sad to see Silicon Valley get so lost in rhetoric where it's one or the other.
I think that's an unfortunate reality about the US today. It's like you either are on this side or you're on this side, and everything in the middle, all the nuance, which is the most important part, people are just completely missing the point.
Yeah, the election was largely won on rhetoric. And I understand that. Like, a lot of the rhetoric resonates with me. I think the way companies succeed is based off of results. We all know this. It's not about like how well a founder can come on a podcast. It's about how well they deliver growth. And I think when it comes to this conversation on merit versus DEIB, it's not a conversation on rhetoric. It's a conversation on what's the results of the team, how do you reward that, and what ingredients drive results.
A curiosity, has your religion impacted the way that you view what you just talked about?
Yeah, I'm a Baha'i. It's a 150-year-old religion where we believe every single person was created equally. I think the reciprocal side of that is that while every person is created equally, I don't want every single person working at Wrapbook. I want the highest performing, most driven person working at Wrapbook. What the Baha'i faith has taught me is that by no means is the color of their skin, their accent, the way that they process information have anything to do with the results that they're going to deliver. And you have to design interview processes, you have to design performance reviews, you have to think thoughtfully about that, because I think the other side is actually dangerous. If you have a homogeneous group of people, same background, same way of thinking, evaluating performance, you're going to largely create a team that's just like them. And I think that that eventually leads to their downfall. Like it might not lead in short-term results, but in the long term, I think diversity actually breeds resilience.
I mean, there's enough studies out there that show that diverse teams are the highest performing teams. And so if we just start with that as like a North Star, I think what you're saying around optimizing for the highest quality talent, optimizing for speed does make a ton of sense. And then you just need to think about how do you act on that. And so the way I imagine it is, it's like, how do you go and make sure you're sourcing the best top of funnel? Because a lot of people reach for the thing that's closest to them because it's the thing that they're comfortable with. They have the experience working together. It's the fastest versus maybe you could find other people and bring that diversity in another way, but it requires intentional effort that some people just don't think about.
Totally. There's sourcing talent. Also, if you look at staff engineers at Wrapbook, they're mostly of one gender. The person from another gender behaviorally is very different than most other staff engineers. If we evaluated that person based off of how many jokes they told on a call compared to everybody else, they wouldn't be promoted. But if you look at their results, you promote them. And I think this is the thing that I'm just trying to poke on, which is I think everyone in tech believes the only thing that matters is results. I think that we as a community can do a much better job of articulating how to receive or achieve those results without creating this binary story of like, we don't care about diversity or we do care about diversity. I think merit is your gate, and after merit, you try to reward people equitably. You try to build inclusive teams. You try to have teams of diverse backgrounds.
Totally agree. I usually ask every guest one question at the end. You decided to edit it, which I think is actually a great idea for the time. So if you were to make a change in trade policies for the day, what's one policy that you would change first?
So this is a bit of a biased answer, but I think one of the things that's happening in the trade wars is we're forgetting about our soft power. The US historically has had really strong soft power all over the world. One of the things that I'd say is associated with that soft power is actually our portrayal of America through film. And when people think of America, they think about different movies. When they think about locations, they think about different movies. I went to Croatia. I thought of Game of Thrones because Game of Thrones was filmed in Croatia. And what's happening in the film and TV industry with globalization isn't currently a thread in the trade wars, and nor is really soft power. And I think there's more of an opportunity to talk about what is happening because manufacturing moved from the US to China so many years ago, and now it's become the rhetoric of like, we need tariffs to move manufacturing back, even though that's not going to actually work in the short run. And then what you see happening in film and TV is the same thing. Productions are moving overseas for a lower cost of labor. It's increasing overseas talent. Currently, you're shipping directors and talent over, like the actors overseas. Eventually, you're going to have actors and directors overseas that will replace the Americans. You're going to have production companies that will replace the Americans. and you're going to start to lose a trade that we used to own. So for me, I think the trade wars need to think about soft power and film and TV as an element of soft power.
I love that. We could chat for another 2 hours on onshoring manufacturing, as I grew up in a manufacturing family. So but we'll keep it there. Thank you for joining me, man.
Thank you so much for having me.
Awesome.
Appreciate you carving out a slice of your day to think a little bigger with us. Do me a quick favor, hit follow, drop a 5-star review, and share the episode with one friend who's equally obsessed with building the future. Huge thank you to the team that makes every release sound effortless. Atomic Growth for the behind-the-scenes horsepower, the brilliant Catherine Thayer for steering our editorial compass, and Devin Natoni for getting each episode into your feed right on time. Their work lets me focus on bringing you candid stories and gritty tactics from the founders, operators, and investors, rewriting entire industries. Until next time, keep challenging the status quo, and I'll see you on the next change order.